Welcome back. As promised, I have with me on the line Jameel Ahmad, the Director of Investment Strategy at NAGA. This is a German-founded and public-listed fintech company based in Germany. And the main focus, of course, is the third quarter review and, of course, the fourth quarter outlook. Jameel, let's do a quick recap into the first 3 quarters of the year. Some winners, some losers, particularly when it comes to the Malaysian market. But, of course, we can zoom out as well towards the global markets as well.
Thank you so much for having me. It's a pleasure to be here again. So essentially, if you look at the 3 quarters overall, we've had a few bumps, we've had a few bruises in terms of shocks in the market as well. It's been a bit of a roller coaster across the asset classes. But if I look back and just say 3 quarters, I like the US dollar. I think it's performed extremely resiliently for most of 2020, apart from one bump that we'll talk about, I'm sure. Gold prices, recent bump lower, but they're still up over 20% in 2020. And you cannot mention technology stocks, whether that's Tesla or Apple or the tech sector as a whole. It has flourished during the pandemic, and if there is a second wave, it's going to flourish even more. Losers, oil. No matter how you look at things, oil prices might be stable for now, but the outlook does not look like you're going to see any improvements in oil prices. Airline sector, specifically in Europe, the listed airlines are Lufthansa, Air France, IAG, which is a founding company of British Airways, or EasyJet. You've seen tremendous losses, and some are fearing for their lives potentially. And then you've got some of the high-yielding emerging markets. I'm talking about the Turkish lira and the South African rand. But ironically enough, the Malaysian ringgit is one of the potential winners of the emerging market basket this year, and I'm sure we're going to talk about that as well extensively today.
Of course. Let's bring up on the screen right now the ringgit performance against the dollar. As you can see here on the screen right now, we're about the same level as we were exactly 12 months ago. The ringgit, of course, weakened during the pandemic at the start of it, and we dropped all the way to 4.4, 4.3. But right now, it's actually been strengthening quite a bit over the past few months. Could you tell us the story of the ringgit moving forward for the fourth quarter?
So you put it completely correct. It's flat over the past year, but actually year to date, the ringgit has only moved 2%. And considering all the global turbulence we've seen, it's been a shocking 2020, no matter what asset class. The ringgit is actually much more of a safe haven, if I could use that analogy, than you would have thought, because it's been the best performing currency in South Asia for a great deal. It's jumped nearly 5% since June, no matter what else is going on in the region too. And in Q4, we see what can really be a make or break. And I'm sorry to use that cliche right now, but if Joe Biden wins the US election, we could see the Malaysian ringgit return to levels that has not seen in over 5 years. But on the other side of the coin, if President Donald Trump does succeed in getting a second term, we could see the Malaysian ringgit and Southeast Asian currencies take a real whipsaw, which will be quite familiar to what happened in 2016. Because if Trump is victorious, he is going to eat into that anti-Chinese narrative tremendously, looking for blame and accountability for the virus, blame and accountability for a lack of ramifications so far. And we do think that's going to be a massive tailwind for emerging markets, and specifically in the South Asian region. So Q4 will be exciting. We see fireworks. We see what could be very good for Malaysia, and we also see what could be bad for the region too.
Now, we've seen that when we started the show early on, we've seen how the exports for the country actually reduced for the first time in 3 months. And do you think that this trend will hold, because a lot of exporters might want to wait until after the elections before they reinvigorate their business?
This is one of the factors, of course, because there is political uncertainty. We can't say that Joe Biden is winning as much as the polls suggest, which means there is political uncertainty ahead, because investors are probably not positioned either for a Biden victory or for Trump winning a second term. Until that debate comes through tomorrow night, which is going to be the first U.S. presidential debate between the two nominees, we won't really have a reflection from market sentiment towards the end of the week as to whether they're, judging their portfolios a little bit differently. But I look at those export figures, and I think that second wave is a serious topic of concern, because we're already facing it in the UK and Europe, and it will spread, because this is the virus that can spread very, very easily. We saw that with the first wave. So I'm a bit worried about deja vu, and whether we have a recent history repeating ourselves, because I do not think we can rely on day-to-day economic releases. And we just hope that the second wave can be contained, because those export figures, which would help Malaysia in terms of GDP potential, we can see another decline similar to what you mentioned in the intro to the show.
Yeah, of course. Let's pull back onto the intro to the show. The two sectors, of course, would be rubber gloves and, of course, E&E. You've already mentioned that oil and gas would be one of the bigger losers, if not already being the biggest loser. But E&E remains the biggest thing in the country right now. Do you think that we have a lot of story to be told, at least in Malaysia, when it comes to E&E exports, despite the fact that, US is the biggest trading partner for Malaysia? E&E tends to export a lot more towards China, towards Taiwan, this part of the world. Do you believe that that might be, I guess, a silver lining in that story of Malaysian exports?
Yeah, absolutely. Look, many countries are still not prepared for the pandemic, and many are still struggling with the first wave. And I'm talking about myself, United Kingdom. Our own track and trace system doesn't even work. So if you have products that can be exported at this time, it's like, no matter which economy it is, they're all struggling. It's like having a load of condiments on the table, that's salt, pepper, mayonnaise, ketchup, you name anything, and investors are just trying to grab whatever they can. So if you've got products that can be reliable during these times, you're going to continue to see demand. And until there is a reputable cure, and we really do have an end to this virus in terms of a vaccine, and we hope that we can have something tangible within the next couple of months, it will take a long time to distribute. So yes, there certainly will be silver linings. There are going to be some products of goods and nature in Malaysia that are going to be topical for some time to come.
All right. I have another graphics here I want to show you. This is, of course, the OPR rate that we've seen over the past few months. Bank Negara has cut it tremendously. We are now at record lows at 1.75. Expectations were present in terms of them having one more cut before the year ends at 1.50, but that never transpired. Were you surprised at the non-cut that happened a few weeks ago?
I was surprised. I was part of the silent minority, because most people did think there would be unchanged policy rates, but there was a couple of left-wing people and left-field guys that did think there could be another cut, and I was one of them. Typically, Malaysia, if you look at inflation and you look at real interest rates, in the whole of South Asia, and I'm including major economies like Australia and New Zealand into this picture as well, Malaysia has the highest interest rates for where inflation is. So I've done the statistics, I've checked it out. If you compare Malaysia with Australia, China, India, Indonesia, Japan, Korea, Taiwan, Philippines, Thailand, Vietnam, Malaysia has the highest interest rates, taking inflation into account. And I do think that inflation remains subdued and depressed, apart from a few bumps here and there. And I think that interest rates in Malaysia, they could be much closer to 1% than 1.75 or 1.5, which is where they are today. And I do hope that the central bank, are able to take the opportunity while major central banks in Europe, Bank of England, the US Federal Reserve are obviously reversing interest rate policy into incredibly flexible directions. And there's a real opportunity for Malaysia to do the same. And I hope that they're able to do that, unless they just don't want to do it, and that's fine. But if there is a second wave and there is, a bite the bullet time, because economies may enter shutdowns once again, we can't rule that out. I just hope that isn't the tool that Malaysia uses then, because they could use it now to improve the domestic economy at a time where, you put it correctly in the intro, external demand is very weak and it is erratic, because everybody has fear in the world right now. They don't know what's going to happen tomorrow, so it's better to plan for what could happen rather than react to it if things do take a turn for the worst.
All right, that is indeed something that we are very concerned about. I'll play some visuals right now on the screen talking about, or showing the story of the Sabah by-election. It's a big state in Malaysia, and we've seen how the elections are just over, and following this election, we've seen how the COVID rates have actually spiked. Now, I know you're not a public health policy individual or an expert in this, but things like this, of course, is going to drive the infection rates even higher. Do you believe that there has to be a time and place where we can talk about democracy, we can talk about freedom, but now's not the time for these things? It's actually the best thing to do right now is just stay put, stay at home, and perhaps diminish that whole notion of going door-to-door campaigning and trying to avoid the election at all cost. What's your view on this? Again, I have to apologize. I know this is not about markets, but what do you think about this topic?
No, I agree with you wholeheartedly. If you don't need to go out, or if you can take precautions, and if going to any kind of public arenas right now, public events, whether it's political or social, it's just not a wise thing to do because nobody can see this virus. You just know that, okay, it's not in the air, but it's on the surface. And if you do congregate into a big group, you have a risk of getting it. And that's the exact same thing we're seeing across all over areas of the world. You saw that the United States economy, it reopened following a forced closure very fast, but it took a matter of weeks for cases in the US, major states like Los Angeles and Miami, to clock higher again. We had a UK government that was extremely vocal about the need to return to work, get back to normal, and then you have another reversal as well. No, we now need to stay at home. We now need to be prepared for a second wave. Many people could suffer with their lives, and the same thing's happening in Europe. So it's very clear, if there's anything that non-experts, and that's the majority of us right now, could do, is to help the scientists, is to help the health officials, and is to help those that really have jobs that are in extremely high demand right now and very pressurized, is by staying out of their way. And the best way to stay out of their way is by staying out of the way in general.
Of course. Okay, we'll take a short break. After coming back from that, we'll be talking about the loan moratorium, which is ending very soon. We'll be right back.